Good morning, everyone, and welcome to the On Time On Target Morning Show. We have a great show for you today talking about alternative investments. Now, you may not even have heard of this before. Especially if you're kind of a stock market only type of person, but there really does come a time in your net worth building journey, if you will, that alternative investments can be right for you. So, those two situations are you build enough wealth to where now you need to kind of diversify away from the stock market. Because when you think about it, if you're at 2.5 million, it'd be nice to be 250 million, but 2.5 million, and the market drops 10%, which is very natural, happens all the time, then that's $250,000. So if you are in a job where you make $200,000 a year and your portfolio drops a normal amount, you may not like the fact that you have lost more in the market than you made that entire year. That can kind of mess with your head a little bit. So that's the number I tend to throw out for folks is once you hit the 2.5 million, it's probably time to take 20% of your portfolio and diversify into alternative investments, which can be all kinds of things. You're not necessarily doing it for outsized returns because a lot of returns you will see will not really beat the long-term market return, but you're dampening that flow. That's one reason. Or you have simple distrust of the market. Now, if you have simple distrust of the market, you will generally do things that will shoot yourself in the foot over the course of your lifetime to keep you out of the market when you should just really close your eyes and stay in the market, regardless of what happens. And if there's a big dip, you simply buy that dip and then go from there. But if you don't like it, can't take it, don't want to take the pain of the market's ups and downs, then you can go into alternative investments. And when we say alternative investments, just to give you an idea, we're talking private equity, we're talking private placement memorandums, opportunity zones, investing in movies. Farm Invest is a new one that's come across my table lately. Top Golf, different things that are out there that I currently have clients invested in. So we're going to talk about those today. So it'll be kind of interesting to get away from the market base. If you want the market base, ticker BX is what we're going to look at. There are other private equity firms, but BX is, in my opinion, the best out there. So simply go with that common stock. So even if you have a portfolio of $500 in it, you can put BX in there and be exposed to alternatives, is what I'm saying. Other than that, most of these you have to have either 50,000 min or 250,000 min just to participate. So a couple of different options there. If you're catching us on replay, thank you so much for subscribing and hit the notifications bell. You'll find out when this comes out every day. If you are here, if you want to be in the room live, it's 25 bucks a month to be in the room. I do have a chat window and a Q&A window off to the side where my folks communicate with me, ask me questions, that sort of thing. And that's where I put in my long and short trades of the day. So with that, let's go ahead and get started. All right, welcome back, everyone. Here's our lineup card for the day. Make sure you have your chat window and your Q&A window set up appropriately. And also, I just put the longs and shorts for the day trading portion of the show today. Standard disclaimer applies. You have to do your own due diligence before act upon anything you hear in this presentation. Full disclaimer information is available at ototnow.com. All right, our mission objective is grow our money, protect our money, and live off our money. I would say alternates. You could say grow your money if you think the market's going to go sideways for a number of years. The lost decade in Japan, if you will, that sort of scenario. If you've been reading up on that and being spooked into thinking that's going to happen to us, then you can diversify. And this is one way to diversify. So really, I would say this today's tactical objectives of alternative investments, of talking about those, is really more of a capital preservation move and diversification move than it is growing our money. So that's what we're going to talk about today. We do have the question today will be, what is alternative investments, which arguably you can start with, but we'll kind of take a look at the that we'll circle back to that after we about talk about a few of these names. You kind of know exactly what you're getting into. All right, our flow for today will be long, short, open, short, long. We'll do a market review, headline review. The long-term investments we'll take a look at. The only chart I have for you is BX, which is the ticker for Blackstone. You can buy and hold Blackstone up to 10%, just like gold or Bitcoin. It is exposure to the best private equity firm in the world. Will that last forever? Probably not forever, but at least as far as I can see, they have their act together. They're really that good. They've reached out to RIAs, which is a person like me that is a small player in the investing world, below 100 million type manager. They've reached out to us and given us an avenue to get our clients access to private equity, which has brought a lot of money in. Again, 50,000 is generally the min for the minor holdings. A major holding, $250,000. Is really what they're looking for. As far as opportunity zones, you may have heard of these. These are distressed portions of the United States that I think these came out under Trump. If not, they came to everyone's attention under Trump. So think of distressed portions of Atlanta or even Austin, all around the United States, where they need money to go in and basically do an advanced house flipping, if you will, on a bigger scale. Well, if you put into these opportunity zones, then if you just use all capital gains that is normally taxed, if you stay in this opportunity zone for 10 years, I think is the number. I haven't reviewed these in a while, 3 or 7 or 10. But certainly the longer you stay in there, all those capital gains can be free. So if you're sitting on large capital gains, i.e. 6 figures of capital gains, and you need to sell something, it's an opportunity to put that money back to work without having to pay taxes on it. So a lot of people find that attractive. These are high risk investments though, so don't think they're not. So you could make a lot of money or lose money in it, but you certainly get the tax savings, which to some people, just to not pay the taxes is enough reason to invest. Private placement memorandums are used for all kinds of things. If you are investing, I have movies off to the right. If you want to invest, $25,000 on a movie, I have opportunities for you through an independent filmmaker, which is all, a couple of them are also clients. Diversify away from your portfolio and get involved in something fun. But either way, or I have a person that's making an app out there that does some amazing things. I don't think I covered it in the show, but I did a specific presentation on it before, called Outlayer. And basically, if you want to invest in that, you can get exposure to basically a startup that is creating a product or service. In this case, it's a product, to be able, and you'll get a private placement memorandum to cover that. As far as Farm Invest, which is the latest one that I'm helping somebody invest with, you can get into. It's almost like an opportunity zone, where opportunity zones have specific investments throughout the United States. Same thing with Farm Invest. If you want to diversify into farming, you can put, again, 25,000 min all the way up to 250,000, depending on what you are taking a look at. And that way you'll sign a document and it will go out and you'll own a farming. Well, if you have $1 million or more, you can actually own the entire farming piece. Otherwise, you'll just own a piece of these properties. Again, to make some money. And farming, not my direct family, but kind of my I'm from Iowa originally, and farming's tough business. We're talking high capital requirements. You're largely dependent on weather, so there's lots of risk there. But if everything goes right, do you make a ton of money? Absolutely. So it's kind of a boom or bust industry, in my opinion. I'm sure there have been advances in 20, 30, 40 years since I really had any exposure to farming. But back in the day, it's boom or bust. You live like kings or can go bankrupt. So interesting. And then other opportunities come out, like I have a relationship with an alternative investment firm here in Austin that got exposure to Top Golf Southeast Asia, Top Golf China. So those are both closed now. They opened and got flooded almost immediately, and then they closed. So a lot of these things, they are very temporary. When the opportunity comes up, like the Blackstone stuff, there's windows, right? So they'll have their BTAS, which is their Blackstone Total something alternative solutions. That's what it is. I was struggling with the acronym there for a second, but yeah, these open up and we're going to raise, $2 billion. And if they have it in a week, then it closes. So, it's not to spook you into, the buy now sales pitch that you're going to miss something, but certainly when these things open, they only need a certain amount of money and then they close back up and then you have to wait for the next one. So that's why it's good to have your finger on the pulse. It's good for me if I'm your money manager to let me know if you're interested in those things, and we can certainly start putting them in your portfolio. I do handle them for you / manage them for you. There's not a tremendous amount of management, but there is a tremendous amount of paperwork. So that's why I'm compensated in this area, is to have the relationship as well as do all the paperwork for you, so you don't have to even dork with the stuff other than signing, a 30-page private placement memorandum that I've put together with the company. And I've also verified that you're an accredited investor if that's the requirement that needs to be met there. From there, whenever you think of an alternative investment, how does it work? Well, it doesn't trade openly on the open market. In fact, you're going to find out almost nothing. You can consider it a black box. You put your money in, you get very little information, and then you start getting your money back. Generally, 7 years is the first opportunity to start getting your money back. Now, if you're in movies or something else that's on a shorter time frame, you could see money earlier than that. But if you go with Blackstone, you put say 25,000 or 50,000 in. I have some money with Blackstone. You put it in, you get a statement every quarter. So it doesn't trade on the open market. You get a statement evaluation every quarter. Some of these pay dividends on a monthly basis. If you're in a real estate version, I do have one of those in the book that pays out a monthly dividend, if you will. Some of these have a K1, which is the nightmare tax form that goes with many of these things. So if you do get involved in this, realize if you're doing your own taxes, you might make yourself even a little more miserable in March or April, or whenever you do your taxes. Or if you pay somebody, some CPAs charge up to $500-700 per K1. So you don't want all your gains going to your CPA, right? Because you invested, and then now you have to pay for the tax piece of it. So anyhow, a lot of things to consider there. We will cycle back to that in here in a minute. Let's go ahead and take a look at think pipes for our standard stuff. Here's the things we're going to take a look at for the open here in about 3 minutes. We have TME going higher, which I really like. OCUP was going higher. It's more thinly traded, and I don't have a storyline for you. And then MS was selling off largely because of some of the issues you've seen on TV this morning. With some of the hedge funds possibly defaulting. Two nice up days to finish the week. Last week, when you focus in to the SPY here, get the SPY going SPY. You can see we bounced, starting Thursday morning, gone all the way up. This morning, we're starting in the red. So just realize that, negativity is in the air. I don't know how today will turn around. Mondays are notoriously tough to think about. Okay, let's look at the futures here, down about 0.5% across the board. You look at Europe is mixed, light trading, no. Again, Asia's in the green, light trading. No numbers from Friday. Bonds, 1.65, so holding below that 174 level. Oil, even with the Suez Canal, the thing is, I guess, floating again, so there should be possible movement here in a few days. Gold and silver still kind of selling off, so attractive if that's what you're into. And then Bitcoin jumping 5%, almost up to 58,000. That has to be close to a new high. I can't remember talking about a number higher than 58, so that must be pretty good. Yes, of all the things that are getting canceled by Gen Z, thank you so much. Let's just cancel rent while we're at it. So yeah, if you're a rentee, you don't have to pay rent all the way through June 30th now. And then reality is going to come raining back down upon you. But yeah, so due to the recovery, COVID, all that, the CDC is saying that this is the right thing to do. So that's fine. Rent is canceled. Yay, no paying. We do have the high profile Derek Chauvin, George Floyd, murder of George Floyd, if you will, trial going on this week. So there could be some outside fallout of that, right? Some demonstrations, things that might make the news cycle. We shall see. Okay, this is why Morgan Stanley is our short this morning, is because of the significant large losses that are out there. Internet stocks, some wild trading, 10 Cent Music, which is our #1 long, TME, and I should post these again for folks who just came in the room, there's our trades that we'll get to in a second. They're going to buy back like 1 million shares or several $1 million worth. See if I find the headline exactly here, but the Chinese stocks have been crushed, so they're starting to come back higher now. So that's what we'll take a look at. Here's our trading board. Go back over to Think Pipes and we'll get set up for the open. Give me just a second. All right, good morning, everyone. Welcome to the On Time On Target play of the day. We have 5 seconds to the market open. We have 4 screens in front of you. On this left screen is the S&P 500. There's the market opening. You see it's opening down 0.3%. We have 10-cent music, which is buying back a bunch of stock. We have that long. I would like to go long. That's my number 1 today. I want to wait to see if this bottom holds. You're looking at about a 25-cent stop. So that would take us right up to 22. So in a perfect world, this will come down here to 21.4, 21.5. I'm not sure we will see that, but if we do, that would be fantastic. We'll let that kind of get going. We have OCUP. We're okay. 22 north, 22 is where we're getting in. 22, I think I saw it. Oh well, pulled the trigger on it. So 22 with a we got to go a 35-cent stop. So 21.65 all the way down here. So bigger stop than I wanted, but we are in that trade. Not the perfect entry from what you can see there, but we shall see. Going again. If you didn't quite hit 22 or you didn't get in the trade because I was kind of waffled on the entry there. Again, wait for it to hit 22 and then you'll be in the trade. All right, so with our 3R point, that's going to be a $1.05, so it's going to be 23.05 is going to be our upper exit. So really, we're looking at a 13-14% move up overall on the day for our trade. But I do like this trade. May even consider coming back and looking at this for a long-term investment. However, that is going to be something we would have to look at later. All right, I do want to zoom in here. That's what we have going on in the market overall. All right, let's see. We have our 0.4, so kind of a big sell-off here in the OCUP. I don't like that nearly as much, but it did have it did fit our criteria. And then over here in the Morgan Stanley, again, this is a short because of all that. We're back out of this trade. So remember, once it breaks that low of the day, you have to be out. You could re-enter this trade later. Again, I think it's beautifully set up to be a nice long for the day, but certainly with my quick entry, did not pan out. All right, this 4-point down 5% entry, so high of the day would be 77.10. Yeah, I don't have quite enough conviction in this. If you were itching for another trade, I would look for a re-entry on TME. Again, wait for it to bottom out, reset a new low of the day, go 25-35 cents above that, and then re-enter it long. I think you'd be happy with that. So in this case, 21.25, you'd be back in at 21.60, which is almost hitting already. So anyhow, I don't trade names over and over during a day, but certainly if you would, picking up a secondary entry at 21.60, covering that low of the day. And again, that resets, that puts you at exit at a 22.65. So anyhow, we'll keep that up there. Darn it, why does this keep doing that? There we go. Keep that up there to keep an eye on it. All right, some other names that are in play this morning. Let's see how 10-cent holdings is going. They're down this morning. And as far as some other names out there, JP Morgan was going to see, that's our number 1 financial. Again, they're in the red a little bit from this hedge fund news, but not a tremendous amount out there. Other names out there that we've been looking at, RBLX. Remember, 64.50 is where it, let's go to a 5-minute chart because it went below that, went all the way down. This is Thursday. Pre-market dropped down below that 64.50, which is where most people are in to the name, and then shot higher during the day. Also Friday, you saw it shoot higher north of 70 for the close and then selling off today. As far as I know, there's no real news out there. This is just a name that is in play, if you will. Another one is BOX. This is WeWork, not BOC, which is right next to X, but BOWX. This opened up last week. I got folks in around 11. Just a few of you, not too many. I was 1050. It was this bounce right here where I bought in. Again, this was the trade that we had that did not work. It turned out to work great right after we were in it. But I entered around here for a few clients. So shot up to the moon. Everything was great. Then kind of settled back in at the close and looks like it's lower, but it's got a lot of momentum higher. So again, that's the WeWorks back if that's something that interests you out there. All right. A lot of strength in the market. Do we check Luckin yet? Luckin has been just selling and continues to sell. You can see the 5-day chart here, even though did get some love Thursday, gave it all back Friday. So kind of stabilizing, hope it holds 8 in there is what I would imagine. Or what I want to hope for. Again, let it consolidate down here so it can turn around and go higher here in short order. All right, let's see what's going on in the big picture. You knew GBTC would be up again. That's our Bitcoin exposure out there. So up 6.6%. Twitter up. I did not hear a headline on why Twitter would be up. Boeing up 3%. You got to like that. GAA. This is our global allocation. So this is when you think this year, when I said we're going to do some slight de-risking, you can see how I do that is through PPTY, which is a real estate property here, US based, move away from the market into real estate. And then with GAA, that's the global allocation. So if things are basically everything that is large cap, not United States, almost like a world ex-USA type fund out there. Again, that's exposure to any time when money is here in the US. We've been making so much money here, US based for a decade or almost 2. When you want exposure outside of that or minimize your exposure to the US, GAA is a way to do that for international stuff. Facebook on the move up. Apple's been really kind of painful. Let's take a look at that chart. So here's where, Apple even got below 120 there on Thursday and Friday. So it's really positioned to go higher. Most of us have so much we can't really buy in here, but certainly it is pretty low, and I would imagine it's ready for a significant move up. All right, there's Blackstone that we talked about down here in the green a little bit, and we'll pull that chart here since I didn't get around to it pre-market. Roblox selling off, a couple of medical names. Laser, Clickstream. There's JP Morgan selling off because of the hedge fund headline. There's Luckin down a little bit, not too much. Palantir's name we haven't talked about in a while. Again, very attractive here. It's finally stabilized just north of 20. Remember, this thing opened at 10, jumped up to a high of, gosh, I don't remember. I want to say it was 40 even. 45 briefly, but realistically high 30s, right? It's spent some time here. It's a 6-month chart. Spent some time here and it's been steadily selling off. Is now the time to re-enter? Yes. Or add? Yes, clearly, right? Because we're right at a resistance area and it's got long-term potential. So really like Palantir here. I wish that we hadn't come all the way back down to here. But, you can't look in the rearview mirror and make any decisions. All your decisions are forward-facing. So I do like adding to Palantir here, not worried about it in the long term. All right, let's leave TD Ameritrade and go over to Chrome again real quick and look at that Blackstone chart. So I've been a fan of Blackstone for a long time, and their chart has been, or their chart, excuse me, their stock has benefited. They came out of the dip last year, out of March, obviously like everybody else, and then kind of went sideways into the election. You can see the election bounce. All this really is, in my mind, is folks looking to diversify out of the market. If you think that we are going to cause inflation with all of the spending, I don't think that's the case, but I respect that a lot of people do, is that, hyper sort of, yeah, a little bit. It does trade like a financial. But if you have the big run up, it just was people looking for diversification out of the market. So when you look at, when does Blackstone benefit the most? It benefits for distressed real estate. So if there is a huge tragedy, like 2007 through 2009, where people are defaulting on their homes, commercial properties are going under, that sort of thing, then you want your money with Blackstone. They're the ones that if your house is worth 500,000 and you can't take the pain, so you listed at 300,000, they show up with 150,000 in cash saying that you can have this today or we're out of here. So not necessarily probably the nicest people to deal with, but if you get behind them, they're very good at what they do. They find ways to make money. They don't play they do not pay a true dividend, even though that's what's showing here. They pay a distribution, which means it depends on their investments that they have, and then they distribute that money back out to you. You can see some ugly numbers here, but forward PE, earnings per share right now is 1.09. Earnings per share next year is projected to be 3.73. So if that's true and they can maintain that, which I don't have any reason to believe they can't make their projection, their PE drops from 60 some to below 20. You look at their returns, nobody's going to short Blackstone. They're just too strong. So overall, pretty good place to have some money. I did want to talk about how they can have outsized returns, and how they, in their BTAS fund, they've never lost money since inception, which is pretty good, right? A lot of people are like, show me an investment that doesn't lose money. It's like, well, Blackstone. If you get into specific investments with Blackstone, and the way they do it, so your money goes into this black box, right? So, and it goes in for 7 to 10 years. And say they buy a property. So if you commit to, like I committed $50,000 to one of their funds. So it's like, okay, so 50K in there, and then they do what's called a capital call. So they say, all right, Steve, you're committed to 50K, send us 15K now. Then they go send us another 10K, then another 7K. Anyhow, they draw my money in. So I don't have to have it immediately available, but I've done a written commit through a private placement memorandum for me to give this money to them. So I can keep it invested in other things until they call for it. When they call for it, I have 15 days to get the money to them. So all that's pretty easy. Once, say they buy, like they bought the Bellagio and they flipped the Bellagio, or they bought Hilton Hotels and flipped them, or SeaWorld and flipped them, which they all have. If they sell a property and make a bunch of money that they've had from me for 2 years, an investor mindset is that they would start returning money to me. They don't do that. They take those gains and they turn around, they reinvest those. So it's that reinvesting inside the fund that really allows them to outperform over time. So instead of just getting a return on your money, you have an internal rate of return. If you remember those calculations from way back in school, they always have your money invested, but they're allowed to turn it over into new properties. So that allows them to have this outsized return, and also allows them to cover areas that are losing money with winners. So they do with, they have a portfolio of distressed real estate. So they're allowed to kind of move things around in there to keep the whole thing as healthy as possible. So overall, it's pretty cool how they do all of that. I had to have that explained to me like 3 times before I could really understand that. So yeah, get a note in the chat there. TME has fallen off. I'm looking at another chart. Yeah, it's down a couple bucks on the day, still up 4% from where it closed. I do like it long here. It appears to bottom out at 2046. So if you want to take a stab at it long on a trade, I would have no problem with that. I am going to, once we're off of the air, I'm going to take a look at it, whether it belongs in our portfolios as a long-term investment. We'll have to see. Or if it's just a headline, which means trade. Okay, last thing we're going to take a look at, and I'll switch this over here in a second to it. Actually, I'm on it now. Investopedia. I'll just type the whole thing in there. Alternative investments. Investopedia. Alternative investments. Definition. All right. A financial asset that does not fall into one of the conventional equity, income, or cash categories. So if you think, those are kind of your big, that's what I talk about with folks. So you're in retirement. My standard retirement portfolio right now is a 2773, which means 27 equity exposure, 70% bond exposure, and 3% cash. Generally, that 3% cash buffer is somebody that's living off their portfolio. So I put a criteria to keep 3% cash there. So not only can they take their monthly income out of their portfolio, but they also can take a lump sum out. So when you see a cash, a larger than a 1% or a 0% cash, that just means I'm keeping their emergency fund in their portfolio instead of them keeping it in the bank, which again will make more money in the portfolio there. Private equity or venture capital, hedge funds, real property, commodities, and tangible assets. Remember, there are ways through a self-directed IRA for you to buy your house through your IRA. That is not the right move unless you have over $1 million portfolio. To even have any exposure to that, but you certainly can. Also, you can buy artwork and some other, I wouldn't say strange, but alternate. Basically, if you can buy it, you can put it into a self-directed IRA, which is it's up here. You have art and antiques, derivative, all kinds of futures, all kinds of strange things you can put in here. It's unregulated and illiquid. So unregulated, I'm not that worried about. If you stay with the bigger names, you're not going to be scammed, if you will. I'm sure you can laugh and say Bernie Madoff, but yeah, I mean, there are some that exist. But by and large, if you're getting transparency through your money manager, you really don't have anything to worry about. Again, if you stay away from Freddie's real estate gig and he's promising you 20% a year, and he won't show you any, the slide deck is sketch. That sort of thing. So, stay away from that. But it does, bills, bail bonds for investments. I like it. No offense to anybody named Freddie or Bill out there. But what we have as far as, illiquidity is, that's a problem. When you think, if you have a bunch of money in the market, which is, I have most of our money in the market. So I can sell it and move it pretty quickly. Obviously, retirement accounts are locked up, but for your, once you max those out, you'll end up, a long-term wealth builder. So you're going to end up with significant money in taxable accounts, right? Where you put that and keep it in there instead of the bank, so you can make more money. But all of a sudden, if you need it, say you're putting in a pool for $100,000, instead of going to get a loan, you just simply chunk that money out and put it into a pool or buy a car. You don't have to do car loans anymore or stuff like that. So once you get to that level, if you put money away like the money I have with Blackstone, that's money I can't touch. I see it sitting there, but I can't touch it. Another thing is you cannot use qualified money, i.e. retirement money, for alternative investments. So if you're with a Blackstone private placement, you can't do that in your IRA. So if all your money's tied up in your IRA, then a lot of these things you can't do. It has to be money outside of an IRA, which again is where that money stacks up once you really kind of get going, because you're taking advantage of every little ounce of tax protection you can get, and you still have money that's investing. So consider, but you don't want to go all in on a lot of these things because they are illiquid and you can't get rid of them. As far as getting your money back, you put money in and they say we'll have it back to you after 7 years. They'll start scheduling money back to you, but they do have a clause in there they can go out to 10 years. So if the money's not right because of the market, they don't have to give your money back at the 7-year point. So, all right, got long-winded today. I'm looking at TME. It's still selling off, kind of breaking new lows for today. So it's almost back to even off this headline. So maybe the headline didn't have as much oomph behind it as I thought it did with the big buyback. So I'm going to take a hard look at it. I do like 10 Cent Holdings. I do like 10 Cent Music. So we'll see if we can put some cash to work in that today. All right, that's all I've got for you today. Thank you so much for listening in, and we will be back with you tomorrow. Bye.